name is Rylyn Bailey. I am the VP of Investor Relations for Equinox Gold. I've been in the mining industry since 1995, been with Equinox Gold since 2016. I was employee number 6 when we started the company, and it is my pleasure to spend the next 10 minutes telling you how Equinox Gold is creating the premier America's gold producer. Our shares trade on the Toronto Stock Exchange and the NYSE American under ticker symbol EQX. I will, of course, make a whole pile of forward-looking statements today, so please do visit our website, SEDAR and EDGAR, to learn more about the company. So we started this company almost exactly 6 years ago. At the end of December 2017, we completed a merger of 3 separate companies to create the Equinox Gold that you see today. At that time, Ross Beaty joined us as our chairman and our largest individual shareholder. And Ross kickstarted our vision of creating a diversified, America's-focused gold producer that would produce over 1 million ounces of gold per year. Ross wanted to build the company quickly because at the time, gold was less than $1,300 per ounce. Ross thought that gold was poised to run, and he wanted to build a gold company quickly that could take advantage of those rising gold prices. Of course, you can't build a company quickly through development and exploration. You need to do it through M&A. So the first company that we acquired was at the end of 2018. We acquired the Mesquite mine in California. That was our first producing mine, gave us about 25,000 ounces of production in 2018. We acquired Leagold Mining in 2020, which gave us a large mine in Mexico and 4 projects in Brazil, and really kickstarted our company into that mid-tier producer range with over 477,000 ounces of gold production in 2020. And then at the end of 2021, we acquired Premier Gold, which gave us a small mine in Mexico, a portfolio of exploration properties in Ontario, but most importantly, gave us the big Greenstone mine in Ontario that we have been building for the last 2 years. And Greenstone is going to be our flagship asset when it comes into production later this year. So along the way, we also sold 2 mines, 2 of our smaller mines, to optimize our portfolio. And we created 3 new companies. We spun out Solaris Resources in 2018. We spun out I-80 Gold on the back of that Premier acquisition. And we also created Sandbox Royalties in 2022. And we've also built 3 mines. We built the Aurizona mine and the Santa Luz mines in Brazil. Oops, losing my countries here. And we built the Castle Mountain mine in the States. So it's certainly been a busy 6 years, but we are well on our way to creating the premier America's gold producer. This is what Equinox Gold looks like today. We've got 7 operating mines spread across 3 countries. So we've got 1 mine in Mexico, 2 countries in California, and 4 mines in Brazil. We achieved our 2023 production guidance and produced just over 564,000 ounces of gold last year. So we are definitely a mid-tier gold producer. But you can see from this slide that we're trading at the lower end of our peer group. So on the left-hand side there, you can see that we're trading at a price to net asset value of about 0.65, even though we're producing 565,000 ounces of gold per year. Our reserve base is at the top end of our peer group with 16.9 million ounces of gold in the ground. And you can see from the right-hand side that we have by far the highest production growth profile with 70% production growth expected in the next few years. So even though we've got all that growth built in, we're still trading at the lower price range. There's a few reasons for that. We did have some operational issues in 2022, so we took a bit of a hit then. But really the biggest reason for that discount is because for the last 2 years, we've had a very capital-intensive construction project underway as we've been building our Greenstone mine in Ontario. And almost every mine that's been built in Ontario over the last 10 years has had massive price overruns, massive schedule blowouts. The last 2 mines that have been built in Ontario have had really big problems. And the market was basically expecting that the same thing would happen with us at Greenstone. I'm happy to report that Greenstone is on time. It is on budget. We will be pouring gold in the first half of this year as promised. So our job now is to get Greenstone in production, get the production growth that you see on the right-hand side of the chart, and hopefully then our share price will start making its way back up this valuation ladder. And Greenstone, when it's in production, will be one of the largest gold mines in Canada. The first 5 years, we expect 400,000 ounces of gold per year. We own 60%, so 240,000 ounces a year will be our share of that. It's also a very long life mine. The initial mine life is 14 years plus, and lots of opportunities to both increase production and extend the mine life at this asset. So it will absolutely be transformative for us, and when it's in production, it's going to be our largest producer, it's going to be a lowest cost producer, and we're very excited to get it in production in just a few months. I've got a few pictures of the project here. You can see more of them in the photo gallery on our website. We put a press release out at the beginning of January that announced that installation activities were effectively complete. We've got the tailings facility complete and ready to go. We've got more than 1 million tons of ore stockpiled and ready for startup. Commissioning is underway, and we will be pouring gold in the first half of this year. So I encourage you to hop on our website, join our mailing list, and then watch your inbox for pictures of that first Greenstone pour. And then Greenstone, we will get a production bump this year when we're in production, but next year, 2025, with a full year of production, is going to be adding 240,000 ounces of low-cost production to our portfolio. But we've also got 3 other expansion projects underway, which together with Greenstone will collectively add about 575,000 ounces of additional production. So we're going to more than double our production over the coming years by putting all of these growth and expansion projects into production. So the next one in line is our Aurizona mine in Brazil. We're doing an underground expansion there that's going to increase the mine life, increase production. We've got the permits in place that we need to start portal development, and we expect to start that in the second half of this year. We're also advancing permitting at our Castle Mountain mine in California to do a very large expansion that's going to take production at that mine to over 200,000 ounces of gold per year with at least a 14-year mine life. Again, that will be big producer, low-cost mine, so it will also be a very important catalyst for our company. And then we're hoping to do a big expansion at our Los Filos mine in Mexico that will increase production, reduce the cost at that mine, and also increase the mine life. So collectively, all of that growth is going to more than double our production. And it's important to remember that that growth is already built into our portfolio. So we've got all of the assets and the plans in place that we need to get to that 1 million ounce a year target. And of course, every time we deliver one of those projects into production, we're increasing our production, increasing our cash flow, decreasing our cost, decreasing execution risk, and all of those are important catalysts for the company and are what should take the company from the left-hand side of this chart, trading at a discount to our peers, to the right-hand side of this chart, where we're trading as a profitable, sustainable, senior gold producer and getting those senior production multiples. So that's really what I want you to take away from the presentation today, if nothing else, is that right now we're trading at that discount, but all of that growth that's built into our portfolio should revalue the company multiple times as we advance those projects. That's the investment opportunity today. And of course, we have the luck of doing all this in a rising gold price environment. So if you remember when we started the company at the end of 2017, Ross thought the gold price was ready to run. His prediction has certainly come through. It's fantastic to see gold prices where they are. And if you listen to Ross's presentations at this conference, I'm sure he'll tell you all of the reasons why he thinks gold is going to go even higher than it is today. Even if gold stays at $2,000 per ounce, that's a pretty good gold price. So we're happy there. But even if gold doesn't go any higher, just by delivering all of the production growth that's built into our company, we'll be adding value for our shareholders. But we're certainly excited to be bringing Greenstone and our other expansion projects into production in what looks like a very strong rising gold price environment. We're in a good financial position today. At the end of the year, we had $192 million of cash in the bank. We've got $265 million available to draw on our revolving credit facility. And we've also got $123 million of equity investments that we could tap if we need to. So we're in a solid position. And then, of course, we've also got cash flow from our 7 operating mines, and then the bump in production and cash flow later this year when Greenstone comes online. The other thing that sets us apart from our peers, aside from that growth profile, is our alignment with investors from an insider ownership perspective. You can see from the right-hand side of this chart that insiders own 8.6% of the company, which is at the very top end of our peer group. Ross, to be fair, owns most of that. He owns more than 8% of the company, is our largest individual shareholder. But all of our executives and insiders have invested personally in this company, so that we are building this business to be a long-term, profitable, sustainable legacy company for our team and a legacy for our shareholders as well. So today we've got the 7 producing mines, the Greenstone mine in commissioning, it'll be in production soon, and those 3 other expansion projects. And 2024 will truly be a transformative year, not only because of the rising gold prices, but we've got near-term production growth coming from Greenstone. It's going to increase our cash flow, increase our costs, and successfully completing that Greenstone build is going to pivot us from what's been a 2-year capital-intensive construction project into being a cash flow-generating mid-tier gold producer, and I hope that transition is strongly reflected in our share price. So unfortunately, no time for questions today, but my colleague Felicia and I are at booth 316. Come by, we're happy to answer questions and talk more about the strategy. Thanks.